Okay.
They're totally different. Silver is not the poor man's gold. Gold is money, and it's the pure money. And silver is a strategic metal, now being called a critical metal. But I coined the phrase strategic metal over a decade ago, and because of its strategic nature, it's necessary for everything that we do in the human race. This call would not be possible without silver. Your automobile would not work. All your household appliances would not work. You wouldn't be able to communicate with your friends, or fly to a neighboring city, or go on vacation, without silver. It's a very misunderstood. I came from a copper company, and when I left that company, I was looking around, what am I going to do next? And gold obviously is a pretty important metal, and a metal I quite like a lot as well. But the supply demand fundamentals of silver just were so overwhelming, that I just said this has got to be the metal that I'm going to choose. And it was similar to copper, so I understood the supply demand fundamentals of that metal, and it just made a ton of sense. And this is in 2002. We didn't even have electric cars. We didn't have solar panels. I was looking at everyone buying cell phones and computers, and internet revolution, and that's what got me excited about silver. Now today, silver has been running in 6 years in a row deficits, and we now have $50 silver. So my whole supply demand thesis, is now paying off. Yeah, it's quite an interesting business. We're a mining company. Opening up a mint was a little bit of a stretch, but it was built out of frustration because we've been selling metal, our silver. We'd ship our silver to a mint, and we were using two or three of them, and we had actually two go bankrupt on us, and then we had to move business to other mints. And back a couple of years ago, they were sitting on our ounces on their floor, and they just weren't converting them into the retail products that we needed for our customers. And people would go to our e-commerce website and see that many of our products were sold out, sold out, sold out. People were saying, "You guys are a mining company. Like, well, how can you be sold out?" And
Yeah.
so I said, "Well, forget this." And so I made the decision to build our own mint, and we chose Las Vegas, just due to its growing economy, and access to talent and people, and international airport. So it was a great place to choose, and we're happy to be there. And it took us about a year to get up and running, but we got up and running in March of 2004. So we're about 18 months into it. Still new. It's still, basically a startup. But last quarter we did $11 million worth of sales through the mint, and we currently have about 7% of our total production going through the mint, which is pretty nice.
Well, that's
Our
pretty good.
Yeah, our short-term goal is to get it up to 10%. We might be there by the end of the year, but I'm sure if we're not, we'll get there sometime over the next couple of quarters. So, the Dory bars get shipped up to United States from Mexico. It's our own silver. Um, then it gets refined. Then it gets shipped up to the mint, and the mint breaks it down, and converts it into a variety of different products that we sell on our first mint.com website. And we make an extra couple bucks. It, of course, costs us money to do it, and we make a small margin on top of the sale price that we sell our ounces for.
Running a mining company comes with logistical complexities, but relying on external mints created unexpected vulnerabilities. Delays, bankruptcies, and production bottlenecks meant that even with abundant silver, finished products were regularly sold out online. The solution was unconventional: build an in-house mint from the ground up. Las Vegas became the ideal hub, offering workforce availability, infrastructure, and global accessibility. After a year of development, the mint launched in 2024 and quickly scaled to millions in quarterly sales. Today, it processes a growing share of company output, proving that vertical integration can turn frustrations into lucrative new revenue streams.
Well, ore grade, it's right across the board. You'll see this in all the miners, that ore grade's dropping, and the reason why that is because price. As the price goes up, we can mine ore that was uneconomic, a couple of years ago. So our cutoff grades can go up now, or pardon me, go down now. So we could mine ore that we just didn't mine before, and so it's we could get more rock into the mill. So we're expanding mills right now, and even though the grades are potentially lower, which we're probably going to see over the next year or so, it's not that relevant because we'll still be producing approximately the same amount of ounces, but just at a higher price.
Yeah, that makes sense. Yeah, labor costs definitely go up as the years
Well, the
progress.
labor costs, yeah, labor costs always, are driver of costs. You can't avoid that. The mining sector is pretty small, and there's always a competition for talent. That never changes and hasn't changed, from the last 30 years. You mentioned energy costs. Energy costs are actually pretty good. We converted three of our mines to LNG over the last 2 years. So that's been very helpful, not only for our environmental footprint, but also for costs. But also, energy price or oil prices have been pretty flat to negative. So our other inputs like ammonia, which is a derivative of oil, cyanide, lubricants, all these things that, are byproducts of oil have all been stable or even in some cases have gone down. So, we've seen pretty good energy prices and not really much inflation. Well, the tariff talk was a little bit nerve-wracking. It didn't last very long because, Trump eventually came out and said gold and silver are exempt from tariffs, which was good. Um, when it comes to other supply chains, we really, suppliers in Mexico, United States, they're all intact. There's no issues there. Um, our equipment comes, a lot of our equipment comes out of Europe, and there's no real issues with that either. So, no, we haven't really been affected or don't really visualize any challenges going forward in the supply chains.
Across the mining sector, declining ore grades are increasingly common as higher grade deposits become exhausted. Yet rising metal prices allow formerly uneconomic rock to enter production, keeping output stable despite lower concentrations. Energy and labor remain major cost drivers, though recent conversions to LNG have reduced volatility and environmental impact. Meanwhile, global supply chains for equipment and chemicals remain intact, easing inflation pressures. Strategic financial tools, like dividends tied to revenue and opportunistic share buybacks, help preserve value for investors. Through careful cost control and disciplined expansion, the company positions itself to remain competitive, even as industry conditions evolve.
When it comes to the dividend, we launched that a few years back, and it's based on 1% of revenue. So it's designed to follow the silver price. So, in theory, the higher the silver price, the more revenue we get. So that's a direct benefit to investors that own shares in First Majestic. We may be updating that dividend. There is discussion going on of potentially increasing it. There's been no decision made yet, but look for news on a potential change to the dividend. You had another question there, which I forgot. In addition to the dividend, we're also buying back shares. We bought some shares last week, and I think we bought some this week as well. We're opportune. If the stock is down, one day silver prices are down 50 cents or something like that, our stock is obviously going to be down. It always does that. So, we'll take advantage of those weekdays in the market and we'll buy back shares. When it comes to investing in the mines, we have a huge exploration program. We're spending over $40 million in exploration in 2025. We've got over 30 rigs active within the company. 225,000 meters of drilling is scheduled to be completed in 2025. You'll look for even an increase in 2026. We're looking at expanding that budget. We're also expanding two mills. Two of the four mills that we're currently operating are going to be expanded in 2026. The Santa Elena mine will be expanded from 3,200 to 3,500 tons per day. And the Los Gatos mine is being expanded from about 3,500 tons per day to 4,000 tons per day. Well, hopefully they're happy because, we'll be able to produce, ounces and hopefully economically and at a reasonable price. And you expand the mill when 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 you know you can produce it. And we've got three of our four mines have extremely large land packages that will be running for the next several decades. So it's a nice time to be expanding the mills in a high price environment as we have today. Well, we've got $560 million in the bank today, and that's increasing, every week. So it's a pretty nice place to be as a mining company or silver mining company. And, we, you know, as I said, we are expanding the two mills, and that takes cash to do that, and the exploration programs obviously take cash as well. So we're cash flow positive, but we're trying to allocate capital as best as we can.
To secure long-term production, the company is ramping up one of the industry's most aggressive exploration programs. Over 30 drill rigs and hundreds of thousands of planned meters aim to uncover new mineralization across vast land packages. Two major mills are scheduled for expansion in 2026, increasing daily processing capacity and supporting decades of future output. These upgrades require significant capital, yet strong cash reserves, over $500 million, provide stability. The focus remains centered on Mexico, where geology, expertise, and jurisdictional familiarity offer consistent advantages. In a high-price environment, expanding infrastructure becomes not just viable, but strategically essential.
Well, it's not going to go backwards. If there's a recession or something, I don't know, maybe, you could argue maybe it would go backwards to some degree. But how do you predict that? Solar panel demand is enormous. We have the nuclear renaissance now happening. Each nuclear power plant takes a ton of silver. Someone told me the other day that one nuclear plant takes 5 million ounces of silver.
Wow.
I don't know if that's an accurate number. That's what a guy told me. I got to do some research to figure out if that's real or not. But it's hard to get this data. The nuclear power industry is not going to tell you that information. They probably don't want you to know. But just cell phones, electronics, household appliances, all the things that we're doing. The military, industrial complex consumes a ton of silver. So
Yeah.
there's all kinds of demands for the metal, and the miners are producing 850 million ounces of silver per year, and that's been flatlined for 10 years now. That it doesn't appear that there's going to be any big mining mines coming on to production over the next 5 years. So that, if demand stays where it is today at about 1.2 to 1.3 billion ounces a year, and that's assuming no growth, deficits of 200 to 300,000 per year are kind of normal. And to fill that deficit, you would need 10 First Majestics just to fill it. Yeah, well, there's above ground supplies around, obviously. The silver's coming from somewhere. We're 6 years into deficits, and there's a limit to what's out there. Maybe the Russians are selling some silver to pay for the war effort. Who knows? We do know that China has stopped exporting silver, and that just happened a couple of weeks ago. India continues to consume a ton of silver. They're one of the biggest silver buyers. So it's hard. It's hard to find out all the details of the supply demand because it's a very secretive industry. But obviously the deficits are being filled, and I think prices have risen, because of the tightness of the market. The price has to go up to incentivize people to sell, and just a fact of life, just the way markets work. We're very focused on Mexico. Nevada is of interest, because of their history with silver, but and we do have the one mine there. It's not currently operating, but it's we just acquired a mine, a few months back, and it was our largest acquisition ever in the history of the company. So, we're very much focused on that, and we know Mexico very well. We're very comfortable in Mexico, and I would think that if there are future expansions, it'll likely be in Mexico as a first choice.
Yeah, that makes sense. California has too many regulations.
Silver is no longer viewed as poor man's gold. It has become a critical material powering modern civilization. From cell phones and home appliances to medical equipment and military technologies, silver's conductivity and durability make it irreplaceable. Renewable energy is accelerating demand even further. Solar panels, EVs, and energy storage systems rely heavily on silver. Recent global data suggests annual silver demand now exceeds supply by hundreds of millions of ounces, and has for years. With production flatlining and few new mines expected soon, deficits persist. As major nations restrict exports and industrial needs rise, silver's strategic value continues to intensify.
Okay.
They're totally different. Silver is not the poor man's gold. Gold is money, and it's the pure money. And silver is a strategic metal, now being called a critical metal. But I coined the phrase strategic metal over a decade ago, and because of its strategic nature, it's necessary for everything that we do in the human race. This call would not be possible without silver. Your automobile would not work. All your household appliances would not work. You wouldn't be able to communicate with your friends, or fly to a neighboring city, or go on vacation, without silver. It's a very misunderstood metal. It's in almost everything that we do in a daily basis, around the world. It's very, very critical. Oh yeah, well, yeah. Gold's not used it's used in some small degree in some components for sure, but on a percentage, it's very, very small. You've got 70% of silver produced going into industry. Well, the silver price, of course. I pay a lot of time, or spend a lot of time watching the silver price. But no, U.S. dollar, the Mexican peso, just fluctuations of our inputs. We run a big company. Our revenues this year will exceed $1 billion in the first time in the company's history, which is a pretty nice milestone. So there's a lot of moving parts in our business, and we have to pay attention to a lot of different things just to maintain our cost structures. Sure. Well, we're listed on the New York Stock Exchange and the Toronto Stock Exchange under the symbol AG. So it's a simple symbol, AG, the periodic table, silver. Nice to be able to get that symbol. And yeah, it's very, very liquid stock. It's one of the most liquid mining companies on the planet. It trades its entire float in each month. Trades about $250 million a day in value. So it trades a lot of stock, and it's very liquid, and it's a real go-to name in the silver space. The institutions love it, just because it's so liquid, and it follows the silver price. It tracks the silver price very closely. So if silver's up, the stock's up. If silver's down, usually the stock is down. So just keep that in mind.
With rising demand and tight supply, silver prices increasingly influence corporate strategy. Currencies, input costs, and global market trends all shape production decisions for miners now generating over $1 billion in annual revenue. Listed on major exchanges under the symbol AG, the company has become one of the sector's most liquid equities, closely tracking silver's day-to-day movements. Institutional investors favor its scale and transparency, while retail buyers appreciate its direct exposure to the metal. As nations compete for critical minerals and industrial demand accelerates, silver stands at the center of an unfolding economic transformation, and the story is far from over.